What does the future hold for Bitcoin and digital assets in 2023? The year 2023 stands as a pivotal year for digital currencies, specifically Bitcoin. Macroeconomic trends are intersecting with Bitcoin's unique four-year cycles, painting an intriguing picture. As we see early signs of inflation peaking, the Federal Reserve could potentially pivot to interest rate cuts in the coming year. On the Bitcoin front, we are approaching the quadrennial halving, an event known to significantly impact its value. Coupled with an increasing rate of mainstream adoption, these factors look poised to drive Bitcoin prices higher. It's an exciting time for Bitcoin, with factors such as political motives to spur growth during election season adding further upside potential. The stage is set for Bitcoin to shine through technological transformation over the coming years. As we can see, both short and long-term catalysts for Bitcoin are emerging. Recent trends indicate that inflation expectations are moderating. A key barometer of this shift is the University of Michigan's influential consumer survey. It's suggesting that folks are beginning to see inflation easing over the longer term. Now, if this trend continues, it could give the Federal Reserve some crucial wiggle room. The opportunity to pivot to a more dovish policy stance could be on the table. If growth slows more than anticipated, rate cuts could be the shot in the arm the economy needs. Now it's not a done deal, and the road ahead is full of twists and turns. The Fed's March and June meetings will be key decision points to watch. The balance of power could shift, and the potential for cuts will be a major topic of discussion. These trends could provide the Federal Reserve with the crucial leeway to pivot to a dovish policy stance. Regulation struggles to keep pace with innovation, leaving the future of a Bitcoin ETF uncertain. As cryptocurrencies gain traction worldwide, the Securities and Exchange Commission, or SEC, has been somewhat sluggish in approving products like a spot Bitcoin exchange-traded fund. The legal landscape surrounding digital assets is still somewhat nebulous, although there seems to be a gathering momentum. The potential impact of an approved ETF cannot be overstated. It would remove significant barriers and broaden the scope for mainstream investors to access crypto markets. However, the SEC's slow approval process has left the future of a Bitcoin ETF hanging in the balance. As we look ahead to the year 2024, the odds appear to be evenly split. Yes, the regulatory environment is challenging, but the increasing acceptance of cryptocurrencies suggests that change may be on the horizon. The odds look roughly 50-50 that 2024 could finally usher in a Bitcoin ETF in America. Views on potential 2024 rate cuts are split. The financial world finds itself divided into two camps. On one side, the doves argue that cooling inflation could pave the way for the Federal Reserve to cut rates, providing a potential boost to the economy if growth slows more than anticipated. Meanwhile, the hawks counter that inflation has only improved marginally and that high rates are still necessary to keep it in check. The battle between these two perspectives will likely hinge on whether inflation continues to decline in a meaningful way. If it doesn't, the Federal Reserve may lean hawkish, keeping rates high. With the market seemingly priced for rate cuts, the Fed's decision could lead to volatility if it chooses to stand its ground. As we move forward, the key decision points to watch will be the Fed's March and June meetings. If no March cut materializes, June offers the next window to reassess. Keep your eyes and ears open because these decisions could have significant implications for investors everywhere. The upcoming Bitcoin halving in 2024 could have a significant impact on prices. Historical precedents show that Bitcoin halvings, which drastically reduce the rate of new Bitcoins entering circulation, have sparked substantial increases in price. This is largely due to the principle of scarcity, a key part of Bitcoin's value proposition. When the supply of something is limited and demand is high, the price tends to rise. Now, as we approach the 2024 halving, many analysts predict a similar pattern. However, it's important to remember that after the 2020 halving, the price boost didn't materialize until September. So, don't be surprised if we see a similar lag time in 2024. But regardless of the exact timing, the broader trend is clear. With its deflationary monetary design, Bitcoin is poised to attract fresh capital, as investors look for assets that can hold their value or even appreciate in a world of low and potentially negative interest rates. Bitcoin's deflationary monetary design should draw fresh capital into the system. 2024 election incentivizes economic support. As it is well known, those presidents already in office and vying for re-election have a powerful motive in ensuring their voters are satisfied and the economic engine is strong. This political fact could cast a shadow on the Federal Reserve, coaxing it into adopting friendlier policies in 2024. Rate reductions, as an illustration, could offer the markets and growth an essential uplift as election season approaches. Nevertheless, the uncertainty lingers. Will the Federal Reserve's independence guide the policy, or will it be swayed by the White House? This is an intriguing interaction of politics and economics warranting our scrutiny. If economic growth diminishes more than expected, the upcoming election could influence rate decisions. This is a precarious juggling act, with the potential to profoundly affect investors and the wider economy. As with any political and economic situation, uncertainties are omnipresent. However, one fact remains clear. The dynamics deserve close observation as 2024 progresses. Looking beyond 2024, Bitcoin holds promising potential. The alignment of catalysts for opportunity is hard to ignore. In the medium term, we're seeing the potential for a Bitcoin exchange-traded fund, which could significantly widen the gateway for mainstream investors. The quadrennial halving of Bitcoin in 2024 is also likely to create a scarcity-induced bull run, adding fuel to the fire. In the long term, as the world increasingly embraces digitalization, Bitcoin's inherent qualities of decentralization, transparency, and security make it a likely frontrunner in the digital asset space. Moreover, Bitcoin's deflationary design could prove to be an attractive hedge against inflation, further driving its adoption and value. However, like any investment, it's not without risks. The regulatory landscape, market volatility, and technological changes are factors that could impact Bitcoin's trajectory. But in the grand scheme, the positives appear to outweigh the negatives. As we look to the future, the stage is set for Bitcoin to shine through technological transformation over the coming years. As we wrap up our Bitcoin 2023 forecast, it's clear that the future of Bitcoin is bright and full of potential, albeit not without its challenges. This digital asset is poised to play a significant role in the global economy, driven by its unique qualities and the broader trend towards digitalization. But remember, it's important to do your own research and stay informed to navigate this exciting landscape. If you found this video informative, don't forget to give us a thumbs up. And for more balanced and insightful content on Bitcoin and the world of cryptocurrencies, make sure to hit the subscribe button and the notification bell. Thank you for watching. Stay tuned for more.